Good afternoon. I'm Doug Loud, and I'm speaking for O&M Partners this afternoon. I want to welcome everyone to the Revival Gold Incorporated Town Hall webinar. We really are glad you could all make it. Just so you know, Revival Gold Incorporated trades under the symbols of RVG on the TSXV and RVLGF on the OTC. For those of you who are new to these broadcasts, 7 years ago in 2014, O&M recognized the sea change that was occurring in non-deal investment marketing. Suddenly, information was way more available to a whole new generation of investors that weren't found in key financial centers. Investors are receiving information at home and in other offices that used to be geared and available only to professional investors. So O&M developed its digital footprint to handle this new flow of information. After today's presentation, there's going to be a Q&A session. The questions in the Q&A are for everyone. This broadcast will answer questions you may not have even thought to ask. I know that happens to me. Questions can easily be asked by going to the question portal of the GoToWebinar or by emailing us directly. For any questions that remain unanswered at the end, we will follow up in a timely manner. For those of you who've dialed in with your phone, unfortunately, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you should be able to hear the main presentation after 5 or 6 minutes, so please stay tuned. Today, our introductory speaker is going to be Paul Harris, the editor of the Mining Journal. Paul is a mining sector researcher, analyst, and reporter with over 16 years of experience in the mining sector and 13 years of experience in Latin America. Since 2015, Paul has been the Latin American editor for the Mining Journal. Paul founded and edited the Columbia Gold Letter in 2011, which focuses on the gold and copper sectors in the Northern Andes, and began the successful Columbia Gold Symposium in 2017. Paul received a BA in Business Administration from the University of the West of England in the UK and an MA in International Relations from the University of Chile in Santiago. Now here's Paul.
Hello. Gold continues to maintain pricing about $1,800 per ounce, which sees producers continuing to build their cash reserves and pay dividends, as evidenced by the year-end results coming out this earnings season. Some people are surprised that the gold price is not higher, given all the economic stimulus around the world and its potential to create inflation. With several COVID-19 vaccines starting to be deployed, there is the prospect of life becoming normal as 2021 progresses. Some observers think this means that gold prices have peaked as the gradual return to normal economic activity will see downward pressure on prices as investor confidence returns and interest migrates to other sectors of the market. Others view the bigger picture of mounting government indebtedness and the inflationary potential of all the economic stimulus as continuing to bode well for gold, with the prospect of prices pushing even higher going forward. At some point, it is expected that mergers and acquisitions activity will increase. Indeed, recent months have seen transactions start to occur, with producers looking to consolidate key land packages near their existing operations or acquiring assets that will become part of their future development pipeline. Transactions in recent months have tended to be in areas where companies already operate and where they are able to undertake due diligence visits within the travel restrictions imposed in response to the COVID-19 pandemic. Market analysts believe there is pent-up M&A demand, and that once it is a bit easier to travel, more transactions will be undertaken. The gradual rollout of the COVID-19 vaccines provides hope that in the second semester, greater international movement will once again be possible. Indeed, some conference organizers are looking at holding physical events again in the latter half of this year. The COVID-19 pandemic has brought home to some companies how extended their communications and logistics lines are, and the difficulty of getting key personnel, consultants, and supplies to some of the more far-flung corners of the mining map. While some have dealt with this by trying to give greater decision-making autonomy to remote operations, others have sought to focus or refocus on regions where they can adequately service their operations, no matter what else is going on in the world. In this light, Idaho in the USA is a jurisdiction that is firmly coming back onto the precious metals map. The state has seen gold and silver production for more than a century, but saw this tail off about 20 years ago when the precious metals prices headed for the basement. But the state is now enjoying an exploration revival as a new generation of explorers have targeted the state with modern exploration technology and knowledge. The state is receptive to mining investment and the jobs it can generate, and has similar favourable geology and permitting regimes as other Western US states, such as Idaho's southern neighbour, Nevada. Idaho represents a stable and well-known jurisdiction in which explorers have a clear line of sight to getting into production if they find the resources that warrant building a mine. Many of the projects are brownfield sites, which have been previously disturbed and which may count with existing permits and infrastructure, reducing the burden on any future development and the cost. Explorers in Idaho have found the capital markets open to them, and they've been able to raise the funds to advance their projects, such that a number of projects have resources and indeed initial economic studies, while another is at the permitting stage. Projects in Idaho have access to skilled labour and technical services and infrastructure such as road and power lines already in situ. The majority of Idaho's power supply is also from hydroelectric sources, which means that many projects will be able to have a low carbon footprint, which is an increasing concern for many investors. Idaho is likely to see a number of gold projects developed in the coming years, which bodes well for the state, for employment, and for the gold companies that are located there.
Thank you, Paul. That was very helpful and interesting. Now we're going to have a presentation by Hugh Agro, the President and CEO of Revival. Revival is a growth-focused gold exploration and development company. And prior to Revival Gold, Mr. Agro co-founded the Carbon Arc Capital Investments, a private equity-backed investor in mining and metals, and served as Executive Vice President for Strategic Development with Kinross Gold. At Kinross, Mr. Agro was a member of the executive leadership team and responsible for strategic and operational leadership of Kinross's growth initiatives, including corporate development, global exploration, and commercial activities, even in Russia. Previously to that, Mr. Agro held senior executive positions at Placer Dome, Senior Capital Partners, and in investment banking with Deutsche Bank's Global Metals and Mining Group. In addition to all this, Mr. Agro has served on the board and audit committees of Victoria Gold, Chantrell Ventures, and America's Silver Corp. Additionally, he has also served as a director, chairman, and interim CEO of Strata Minerals, and currently serves as a director of the Fort Barons Estate Winery, an award-winning winery located in British Columbia. Mr. Agro also holds a Bachelor of Science in Mining Engineering from Queen's University and an MBA in Finance from UBC and London Business School. Now here's Hugh.
Well, thank you, Doug, for that introduction, and thank you all for joining us for this webinar on Revival Gold. It's great to hear Paul's introductory words and for you all to learn something about Idaho and why we're so excited about being in this great western state. Here is a cautionary note. I encourage you to read that. I want to talk a little bit about why I'm in gold, and not so much from a point of view of the economic case for gold. Gosh, the world is racking up record levels of debt. You're eclipsing global GDP, and there's just more of that stimulus coming. But what's got me excited about being in the gold industry right now is this growing gap between the pace of global gold production, the blue line shown here, and the pace of discovery, let alone permitting and financing and constructing new sources of gold to feed that growing demand. It's a big gap, and it's growing, and it is going to lead to opportunity for investors. Revival Gold was built to satisfy that gap in some part, and to do so in good geography. So we're located in the western US state of Idaho. We've now built up over the last 3.5 years a 3 million ounce resource of gold. And we've got now strong PEA economics on the first phase of that project and potential. You can see here that there's some gold bars from the prior operation of Beartrack-Arnett, and we'll come back to speak about that. We're located in the eastern part of the state of Idaho. Idaho is ranked in the top 10 of jurisdictions worldwide for investment opportunity and investment in mining. Why? Because it's got great geology. There are over 26 million ounces by our count of resources that are undeveloped in the state of Idaho. The state also has a favorable state regime and a set of regulations, and has this great pedigree in exploration and mining. The state was founded on exploration and mining, ranching and agriculture, and there's a great understanding and a strong professional cadre of people from the mining and exploration world who are available and keen to get started on new projects in the state. Revival Gold's growth asset is the Beartrack-Arnett Gold Project. And just to summarize, before we get into the details, this is a project that has a past history of producing gold, the largest past producing gold mine in the state of Idaho. We've got a 14,000 acre property position, now with 3 million ounces of gold over a 5-mile trend of exploration potential in favorable structure. We've gone through the first phase of putting together a heap leach project economic assessment to produce somewhere between 70 and 80,000 ounces a year of gold in a low technical risk brownfield site. What's more, we've got this very favorable follow-on project in the mill phase, and we'll talk more about that in a moment. Of course, we're in Idaho, a top 10 jurisdiction, as I said earlier, with skilled workforce and excellent infrastructure and understanding of responsible mining and the role that responsible mining can play in society and in the communities in rural Idaho. Finally, I would say Revival Gold's trading at a very compelling valuation today, $10 US per ounce of gold in the ground, relative to our peers that are 3-4 times that, and analyst price targets which would see a similar re-rate in our share price. Diving into the details just a little bit here, I want to talk about the first phase of the project at Beartrack-Arnett. You can see the infrastructure that we have available to us pictured on the slide on the right. Here you can see that we've got an ADR facility, we've got leach ponds, we've got power to site. All of that is being redeployed in this first phase of the heap leach operation, 72,000 ounces a year with an all-in sustaining cost of just over $1,000 an ounce. 100 million of capital, and again, brownfield site, so low technical and permitting risk. We're only consuming about 1/3 of the resource in this first phase operation, and you can see that pictured in the bottom right of your slide. Some further details on the project. That's scaled at about 12,000 tons a day, open pit operation, 0.87 grams per ton gold in the head grade, and a 2.7 to 1 strip ratio. This is a very similar operation in terms of scale and in terms of the way it's set up as the prior operation, which closed when the price of gold fell below $300 an ounce in early 2000. So we're taking advantage of the knowledge we have on the site and with the operational history to do something that is in large part within the disturbed area of the prior operation, and in large part similar in technical approach and operational approach, which lowers risk. Here's a quick snapshot on capital estimates. And I want to stress here that these are capital estimates that were done by A-class engineering firms. This was done by Wood PLC. They've got offices in Toronto, Canada, and down in Boise, Idaho. And we had the A team on this project economic assessment. 38% of the capital in this $100 million first phase heap leach project is in indirects, contingency, and owner's costs. These are controllable items and really give us a lot of comfort with the capital number as being something that we can deliver on. $200 per ounce of production is what it amounts to in total, which places us very favorably relative to our peers in the heap leach business in the United States. This is a figure of the site layout And just to give you a feel for what we're doing here, we've got a couple of pits on the right-hand side of the page here, a north pit, a south pit, and leach pads shown in purple. The area where the plant sits that you saw in the earlier picture is right about here at the apex of the property position, so nicely positioned for what we're starting with in the mining opportunity, which is at Beartrack. And then the satellite deposit, which is about 5 miles by road from the infrastructure located here in an area called Haiti. Another picture of the infrastructure, just to give you more of a feel for what we've got here in terms of a head start. Head start both in terms of capital, but also in terms of our permitting. And we've got some aspects of permitting already in place, and we've got a lot of baseline information which will allow us to move through the re-permitting of this site on a much quicker basis than we might in a brownfield site, or even in a greenfield site, or even a brownfield site where the infrastructure has been removed. I want to stress that this plant, this ADR gold production facility here, is currently operating. It's pulling gold from leachate solution off the old pads. Nothing consequential, and it's not for our account at the moment, but it does operate, and there will not be a large refurbishment cost involved with getting that plant back up and running. It was well constructed in the 90s. I like to put our project into a little bit of reference relative to the other opportunities that investors have out there in good jurisdictions. This graph describes the total resource and the grade for open pit development projects in the United States and Canada that are independently owned. And you can see Beartrack-Arnett pictured here. We are 100% gold, offering investors full leverage to the metal, unlike some of our peers. And furthermore, we're in the top 5 in terms of grade, sitting just over a gram per ton average in our resource grade. So good grade and very compelling metal composition here at 100% gold. Our resource, 3 million ounces, is still growing, and I would expect that to grow significantly in the years to come based on what our geologists are seeing. Importantly, in our first phase operation, we're only consuming about 1/3 of the resource. And as we develop out that mill project for the rest of the resource, I think you'll see the economics start to really improve here. Lots of option value in terms of metal in the ground and in terms of economics to come. And so we're riding the classic Lassonde curve of value creation in the mining industry in 2 ways. Firstly, through the development of the heap leach first phase opportunity at Beartrack-Arnett. Secondly, through continued exploration as we add resources and build on the potential along now 5 kilometers of favorable trend in the main Beartrack property position. In fact, we've just come out with results recently from the main trend. I'll come back to that, but very compelling results from drilling last year. Here's our overall land position here, and what I want to stress in this figure is that we've got a large land position. We've got multiple occurrences of gold mineralization along what's known as the Panther Creek Shear Zone on the Beartrack right-hand side of this property position, and then over here on the Arnett side of the property position, where we've got multiple targets for further exploration and a growing satellite resource to the main ore body here at the Haiti zone. I won't spend a lot of time on the details here about the Haiti zone, but for those of you that are technically minded, I'll point out a couple of things. First of all, we're on the left branch of the property position here. This is a small blow up of this one target, which is part of our PEA plan for the heap leach restart project. We've got a 200,000 ounce resource pictured in purple here. And then beyond that, this wonderful yellow shading represents the soil anomaly in gold uphill of this resource that we have at Haiti. An excellent opportunity for us to continue to grow the deposit. And in fact, what we see in a sectional drawing through that Haiti zone from our drilling in the holes circled on this sectional view is that the deposit is open. And again, just to put this into perspective, every year of free cash flow in our first phase heap leach project amounts to somewhere between $30 and $40 million US a year of free cash flow. Currently, we've got 7 years of mine life in that plan, but as we add years to that plan, it's going to continue to grow measurably. And again, just to put that into perspective, in 1 year of free cash flow, we cover off our entire market capitalization today with no credit for any of the other potential around this project. So adding years to the oxide heap leach project have tremendous value for our shareholders. And you can see that there's a lot of potential here just in this sectional view, up dip of the main deposit and in the opposite direction on the west side of the main deposit. But there's more targets to come. We've got at least 3 or 4 other target areas on that left branch of the property position. You can see some of these pictured here, hot points in the soil geochem across the property. And one in particular that we're keen on here, Romans Trench, where we've got some drill hole results from prior drilling that are quite interesting and warrant follow-up. In the main Beartrack trend, so now on the right side of the property position, looking at a long section view through the main mineralized structure in that deposit, a couple of things to point out in this busy slide. First of all, we've got high grades in this deposit, 71 grams over 10 meters in the Wason-Dixon area. You heard me correctly. There wasn't a mix-up of a decimal place here. 71 grams over 10 meters. We've got this wonderful open pit starting opportunity with 1.5 grams at surface in open pit mill material. And then just recently we've come out with results, and we'll have a lot more to say about this as time goes on here, but we're starting to pick up the indications of a underground potential in the Joss area in higher grade material over 1 kilometer of distance. Here's some of the core from that drilling just released last week. 4.6 grams per ton over 10 meters, almost 7 grams over about 3.9 meters. Some really intriguing things coming out of the drilling from last year, and we'll certainly be back in there this year following up with more. I like to show folks what has been happening over the years at Beartrack-Arnett. It's a wonderful story, all in the domestic United States, a story of growth, and limited only by the drilling. Every hole that we've drilled at Beartrack-Arnett has intersected gold mineralization in the 4 drill seasons that Revival Gold has been on this project. And you can see in this 3-dimensional view of the deposit as it's grown over the years that we've got something really exciting happening here. And it pays. Discovery cost to date for Revival Gold for the ounces that we've put on the books is less than $5 US an ounce. I want to say a little bit about some of my colleagues at Revival Gold. Wayne Hubert, our non-exec chairman, former CEO of Andean Resources, which is sold to Goldcorp for $3 billion, built up by Wayne and his team from 100 million market cap. Don Byrack, another director of the company, who is an Idaho resident and a super geologist, has worked with Coeur d'Alene and AngloGold Ashanti throughout North and South America, an outstanding explorationist. Steve Priestmeyer, our VP Exploration, just doing a top-notch job in terms of the quality of our QA/QC and the execution of our drill programs and geology, leading a team of really keen and fired up professionals. Rod Cooper, Senior Technical Advisor, Debbie Strusak, our Government and Community Relations, an expert in permitting and dealing on federal lands and in the current environment where ESG, environment, social, and governance are top of mind for investors. All first-class executives, first-class professionals. And on the subject of ESG, I cannot finish this presentation without speaking a little bit about the support we enjoy from the local community, the commitment we have to the environment and our people and the community in which we work, and the strong levels of governance recognized by some of our institutional shareholders for being both forward-leaning and top of class. We've got a history here of an operating mine and an operating exploration project, which has got which is award-winning with both state and federal governments, and as I've said, that enjoys the local support of Lemhi County and the state of Idaho. $51 million market cap for all of that, ladies and gentlemen, $51 million market cap. We are largely institutionally held. There is a very good opportunity for the retail investor to get involved. We've got good liquidity at about 150,000 shares a day trading on the OTCQB and on the TSXV. Call symbols RVG on Toronto and RVLGF on the OTCQB. Lots of analyst coverage, and importantly, we have the cash to continue the momentum and to bring you exploration and developments from the company. Finally, I would stress that my management owns 11% of this business, so we are very much in tune with our fellow investors, driving value for the good of all. I've spoken a little bit about the value potential here at Revival Gold and the opportunity for investors. I think we've got an outstanding investment case. On the left side of this graph, EV or economic value per ounce. On the right side of the graph here, grade. And as many of you know, grade is important in terms of establishing value in these companies. So too is the quantum of resource shown in the size of the gold bubble. And if I've communicated anything to you today, it should be that this is a fast-tracking project. We've added resources at an incredibly quick pace here, from 0 to 3 million ounces over the last 4 drill seasons, and that is going to continue to grow. We are 100% gold. We are in a relatively strong grade position compared to our peers, and we've got lots of blue sky potential in this project, both in terms of the existing first phase heap leach project, but also in terms of that bigger mill project, which, by the way, has been scaled by our consultants at 20,000 tons a day or 300,000 ounces a year. So it's a big prize. We'll focus our activities going forward on more drilling, advancing the engineering and the permitting plans with respect to the heap leach project. And of course, by the time we get into 2022, we'll be looking at an updated resource and the next stage of engineering, which is a pre-feasibility study. That will set us up by the end of 2022 for a construction decision on that first phase operation. And being that it's $100 million of capital, I would say it's a relatively modest bite. One of our major shareholders is Orion Mine Finance, one of the industry's largest private equity players in the mining space, and so we are well set up to fund any construction financing that is approved by the board. That's it in a nutshell. Veteran team, $9 million of cash to continue to progress the project and what we are doing in the exploration side. We've got these excellent economics on a proven brownfields property. We've got a team that's done it before, including the former general manager for the operation at Beartrack-Arnett, Pete Blakely, an outstanding gentleman and professional resident in the town of Salmon, Idaho, where we're working. Great valuation at $10 an ounce in the ground. It's a compelling opportunity for investors. And I'm very happy that you've taken the time to learn more just now. Happy to take questions, Doug and team, from the audience.
Wow, thank you very much, Hugh. That was interesting and fascinating. What was that huge number of grams across the 10-foot wide vein?
Yeah, so we've got anywhere between 4 and 9 grams per ton in intercepts, 14 drill holes across 1 kilometer of strike. We'll be saying more about that, Doug, in the weeks to come, but it's certainly got our geologists' juices flowing.
Wow. Let me see. I have to ask my favorite question. You did touch lightly on permitting. Do you need more permits to do the things you're planning? Have you already got them grandfathered in from the olden days? I want to make sure there's a mining project and not a permitting project.
Yeah, good question. Listen, I've been 30 years in this business, and I don't want to spend the next 10 years permitting a project. I can sympathize with your sentiments, and that's why we came to a brownfield site. You know, this is a site that's already got some of the aspects of permitting already in place, and we've got all the baseline data, which is usually where you see a lot of delays in the permitting schedules, the requirement to go out and get data, flora and fauna data with respect to the project. In our case, we've got a 30-year history here, and we're on an existing plan of operations. We've got an existing cyanidation permit. So these are things that we can leverage for the re-permitting of the site. Now, when it comes to the mill project, once we're through the first 10 years of mine life here, 9-10 years of mine life here, when it comes to the mill project, we will have to go through a more extensive permitting exercise. But that, I think, is a great place to be here with this first phase, the relative ease and simplicity of permitting, and the ability to, really just jumpstart the project.
So basically, you can get going with what you've got while you take the time to get the permits for the mill project.
Correct.
That's great. And you own the land? Is it Bureau of Land Management land? I missed that part.
Yeah, so as is typical in the United States, we have a mix of private land and we have a mix of federal land. In our case, the federal land is managed by the U.S. Forest Service. I've just come back from Idaho and meetings with members of the Forest Service team there. And look, they're government folks doing their job in a responsible manner. And I would say that nothing in the permitting world is easy anywhere in the world. But what I love about working in the United States is we have rule of law, we have process and procedures. There's no arbitrary exploitation of property positions, and we have a regime that understands the benefits that accrue to communities, both social and economic, from responsible exploration and mining. So we're in a good position here in terms of our land. We own 100% rights to our land position or have options for 100% rights. It's a nice package, 14,000 acres of land.
That's great. Let me see if we have some other questions. Victor, Zhao, do you have any questions today? Here he comes.
Hi. Yeah. Can you hear me?
Yes, we can. Clear, Victor.
Yeah. Good. Thanks. It's a good presentation. And so do you think you will have more need to raise more money this year?
More money. I think it's at our current share price, somewhere around 70 cents a share. We won't be too keen to do any raising of money. We've got a great project. We've got cash in hand. I think there's a lot more value to come into the stock before we look to come back to the market. It's an exciting time for the project, and as you know, The gold price has been a little bit sideways trade in the last month or two. I think we would be a little bit more opportunistic about pursuing future financing. No need to do it right away.
Okay, thank you.
Great. Scott, do we have questions from the audience?
We sure do, and I want to thank the audience for sending these in, and if anyone else has other questions, please use the question panel on the control panel. First question is, how long has the Beartrack-Arnett mine been dormant, and why was it shuttered? Who owned it prior, and why did they sell?
Super to have that question. Thank you very much. The history of Beartrack-Arnett is interesting. A lot of geologists have been through this project, and there's a lot of curiosity around it. And we were very fortunate to be able to achieve a deal with Yamana Gold, the owner of the project, in 2017, at precisely the time when Yamana was looking to offload costs, offload its North American or U.S. exploration team, and address the immediate challenge of debt. So we had good timing, and as is often the case in the mining and exploration game, timing is very important for the value creation process. So I would say, first point, good timing on our part. We had assembled the neighboring land position. We came to Yamana with a very with an arrangement that's a win-win arrangement for Yamana Gold. Yamana has been a great partner, and I think they're happy to see our success, because as part of our deal, we made them a shareholder. Going back to the history of the Beartrack project, it was put into operation in the early 90s. It operated at about 100,000 ounces a year through the 90s and into 2000. And of course, as some of you will remember, in 2000, the price of gold really came off down below $300 an ounce. And at that point in time, a lot of projects were mothballed. There was also this exodus to South America. And again, for those of you that recall, in those days, South America was a lot simpler to permit than North America. They hadn't really established the criteria, the regulations. And so a lot of companies went down to South America to enjoy that benefit, to enjoy the benefit of favorable labor rates, and even to enjoy the benefits of low-cost power. And of course, all of that has turned 180 degrees. There's a huge onshoring trend in the United States generally, and in respect of power costs, we enjoy power costs in Idaho 5 to 6 cents a kilowatt hour, which would be probably a third of what you see in the Andes in Chile. We enjoy labor rates which are favorable, probably 40% less than what we might see in the South American countries. And of course, higher productivity, rule of law. For all of these reasons, we've got companies coming back to the United States. And in fact, in the state of Idaho, we've got Barrick, we've got Exelon, we've got Centerra. There's a number of companies that have come into the state looking for an onshoring opportunity in a low-risk jurisdiction.
That's a great answer, thank you. The next question, when will you be producing the 72,000 ounces per year, and what stands in the way?
So next steps for us are engineering fieldwork, which we're commencing with this year. We'll roll into a PFS by the end of 2022. And then the next step from there, a board decision to proceed through the steps that take us into construction. So we'll submit our permitting, we'll wind that up, and we could be in construction in 2023, 24, and in operation in 2025. It's not a complicated ramp up. There's not a lot really to construct. And the permitting process, as I've tried to explain, is relatively constrained because we've got all the baseline data and we're already setting ourselves on the course to develop the remaining pieces that we need now, well in advance of a construction decision.
Thank you. Excuse me. Next question, will you be able to drill / mine all year long?
Yes, the Idahans are a tough band of folks, and our team is led by a Westerner, a gentleman who's run this operation through thick and thin, 365 days a year, 12,000, 14,000 tons a day. No reason why we can't do that again.
That's great. Next question, your targets Haiti and Rabbit, etc. How do you determine these were targets? Was it from previous exploration or your own new recent exploration?
In the case of Haiti, actually the project dates back to the first governor of the state of Idaho. We've got a lot of pedigree here, a gentleman by the name of George Laird Shoup. And so in that case, we took advantage of all the great intelligence that the old timers left us from their activities. In fact, through the valleys, and one of the reasons why we're most intrigued by this project, through the valleys in the area of our project, there's been extensive placer mining. And we think, together with what we've discovered, the inventory of gold that's been surfaced to date is in the order of 4 million ounces. So there is a big endowment of gold here, and we're just scratching the surface in terms of understanding the potential in the hard rock across our land position. So we are following in the footsteps of the early pioneers with modern exploration and mining approaches. We have some of the best scientists working on this project, both on our team, with our technical advisors, gentlemen like Phil Walford and Laurie Curtis, and with our external consultant geoscience groups like Mira Geoscience, applying AI technologies to the extensive data that we have available to us. And all of those things are helping us focus in on targets for future exploration. Rabbit is one of those where we've got sniffs of gold now in a location 2 kilometers south of the most southerly drill intercept that we've had to date. So we're talking big distances, big target potential in what is a system that's produced well over 4 million ounces of gold that we're aware of to date.
Wow, that's great. Thank you. Next question, you have 30 to 40 million a year in cash flow projected when you're operational. And you mentioned that would begin, I think, in 2024-ish. How will you divide that up? Dividends, exploration, expanding mine life, question mark. Yeah,
look, we're owners alongside our fellow owners. And so our objective will be to drive the share price higher, to do so in a responsible manner and in a way that wins and maintains the favor and the support of our stakeholders that are essential to the future cash flow of the business, being our employees, being our community, being the state of Idaho. And so we will do the things that are of best value creating opportunity for our shareholders, including dividends.
Perfect, thank you. Do you have any NSRs?
There are NSRs on the project. Most of them are capped. They range from 1% to 2%, but they're capped for the most part at $1 million or $2 million. So it's not a consequential royalty burden. The one royalty that is not capped, 1% on the Beartrack side of the property, owned by Yamana, prudent negotiators at the table.
Okay, great. And you mentioned analyst coverage. What is their target price for the stock?
Average target prices range from $1.45 to $2.45 a share, against a current Canadian dollar share price of about 72 cents a share. So lots of upside.
Nice. And I think the final question here you may have answered. How deep do you think the new targets are, Roman Trench, etc.? Are they all surface, underground?
So Roman's Trench is a surface target. so far as we can tell from the historic drilling. But it's an interesting question, because back in the 1800s, there was some underground mining in the area in a location known as the Italian Mine, presumably named after an Italian that came into town and put up a 30-ton stamp mill. So we do know that there's high grade at depth in these locations. All of our drilling to date in the Arnett property position has been within 150 meters of surface. The resource that we currently have at Hades starts at surface and runs down to about 130, 140 meters from surface. So we'll expect to see more of that at Hades. We'll certainly expect to see close to surface opportunities at Romans Trench. On the main Beartrack trend, we continue to get close to surface intercepts, but I'm very intrigued by the underground potential, because the deposit's open at depth to 600 meters drilled now. And we know from some of the deposit analogies, such as what we might see at the Kittilä operation in Finland, that these things can go down 1,000 meters or more. This is a orogenic gold system. They're deep-seated. The grade and the mineralization is very consistent, both vertically and horizontally. So we've got a ton of potential here. This is just the beginning.
Excellent. And just for me, can you explain orogenic gold system?
I'll do it as simplistically as I can, Scott. I'm not a geologist. Unfortunately, I'm a mining engineer, which burdens me with just wanting to see the tons, the grade, and the dollars that flow. So apologies to my colleagues who are the geologists, but orogenic simply means a system formed at depth, hydrothermal fluids working inside a fracture to deposit gold. And then these deposits, come to surface in a mountain building process and are discovered by, in our case, gentlemen like the first governor of the state of Idaho and our team following up here now a couple hundred years later.
Excellent. So they go deep, basically.
That's the point, yes.
Yeah.
And they're deep, they're consistent, and they can be quite pervasive. As I've tried to express, we have known mineralization over a 3.5 mile trend, and we've got another 1.5 to 3 miles of prepared structure that we know from the geophysics, and that is prime target for drilling.
That's just great. And if we have any other questions that come in, we will be certain to pass them along to you, and you can get back to the individuals. So please feel free to send us questions even after this presentation, and we will be sure to get them answered. I'll turn it back over to you, Doug, to now.
Yeah, I always like to ask my favorite question last, so that we'll have something to take away in our little pointed lawyer head. What's the one thing you want me to remember after this presentation about Revival Gold?
We're trading at $10 an ounce in the ground. The gold price today is $1,800 something. It's a compelling valuation.
That's great. Any last words before we sign off?
Not from me. Thank you all for attending. Website www.revival-gold.com. We are on social media if you'd like to follow us in that way. Jump on our email list. Feel free to reach out. As Doug and Scott have explained, we're happy to answer questions put to O&M partners. We thank you. We thank O&M partners, and we'll look forward to telling you more as the project develops.
Thank you very much.
Thank you very much, Hubert. And thank you all for tuning in today and hearing what I think is a fascinating story. Bye-bye.
Bye.